With the lower rates, Gary, transitioning to thing number two, obviously we're talking about more inflation, reduced purchasing power for the dollar. We've seen Bitcoin rise over the last week or so with the expectations of that weaker dollar. So thing number two, Gary, we're basically just getting a Bitcoin update, thing number two.
Yeah, so MicroStrategy has continued to buy. I think recently they raised $750 million through a convertible debt offering and purchased $1.1 billion of Bitcoin. I think more than 18,000 Bitcoin. Michael Saylor has been, he was early and right and very clever in the way he structured all of that. The key thing here is that when the Federal Reserve cuts interest rates, you end up with two effects. One is the advantage of holding securities or dollars, which have a current yield, meaning you get interest on it. Well, the amount of interest you get holding dollars just went down. And obviously it depends, right? The long end of the curve, actually the yield went up on that. So the long bond went down, short bonds went up with a lower yield. But anytime you cut the amount of interest that you're getting on dollars, it makes non-yield instruments like gold or Bitcoin relatively more attractive. And so that's what you saw. The other thing is the Fed cutting rates too early, again, means we're going to have more inflation. And if that's the case, right, think about inflation as a reduction in the purchasing power of your dollar. Well, that doesn't affect Bitcoin. It doesn't affect gold. And so, if the dollar loses purchasing power, but these harder other assets, again, like Bitcoin, don't lose purchasing power, then the dollar price of Bitcoin goes up. And that's what we've seen recently.
Gary, are you seeing with everything that's happening, and it seems like with chatter in the market, that Bitcoin is just becoming a critical asset really in any diversified portfolio?
You know, it's a great question. And, BlackRock just came out with a white paper on it, which I think is kind of funny because, they were very anti-Bitcoin until they realized that they could start their own ETF and make money from it. I don't know that anything is crucial, but I think it's wise. And, my largest position in my portfolio right now is Bitcoin, partly because I bought a large position and partly because we were buying it, at about a fifth of the current price, a quarter of the current price, a fifth of the current price. So, it's that position that I bought has quadrupled, quintupled, something like that. So for me, it is a gigantic position. Um, and so, I don't know that anything's a critical asset, but it's certainly something that I would recommend holding. If you feel like I missed it, it's too late. You didn't miss it. It's not too late. The purchasing power of the dollar is going to continue declining. The one thing that I would convey to people is understand the difference between the short term and the long term on this. So a lot of people have looked at Bitcoin's performance over the last few years as we've had a lot of inflation. And there were times when we had a lot of inflation and Bitcoin was going down. And I said, hey, it's not a hedge for inflation. Well, short term, Bitcoin behaves as a high beta proxy for tech stocks, which basically is just a fancy way of saying whatever the market is doing, Bitcoin does that in greater size, right? If the market is up 1%, Bitcoin will often be up 2, 3, 4%. If the market is down 1%, Bitcoin will often be down 2, 3, 4%. So that's all that means. So in the short term, it's a proxy for high volatility tech stocks, like the Nasdaq's QQQ. In the long term, it's absolutely an inflation hedge. And if you're going to get future inflation, and I believe we will, then you want to own things that will hold their value, meaning you will get more dollars for that. Again, Bitcoin and gold are great options for that, as well as energy, which we've owned for years.